Good morning, everyone. This is Curtis Hawks with Insurance Agency Marketing Services, and I want to thank everybody for taking some time to be with us this morning on this very momentous occasion. We're very excited about this partnership. With me today, I've got AJ as well as Paige with North American, and then we've got JT, Steve, and James with Annexus. And one of the core areas IAMS has always focused on is making sure that we've got the best solutions for our advisors, whether it's marketing or service or our product catalog. Annexus has a very well-known name for a number of years, and so we're very excited to be able to enhance our portfolio with this partnership. And so today we're going to take a deep dive into who is Annexus, what is this new product offering, and how can you use this to help grow and scale your business. So with that, Paige, I'll hand it over to you here to get going here.
Yeah, awesome. Thanks so much, Curtis. Hey, everyone. I am Paige Phelps, Regional VP here at North American. And today I'm going to share with you an overview of Annexus and why it's such an important part of our conversation. And then I'll pass it off to our team at Annexus. So Annexus is a leading independent product design and distribution company focused on helping Americans grow and protect their retirement savings. So they work closely with carriers like North American to bring new ideas to life, combining strong product design with advanced indexing strategies to create those solutions that help aim to improve client outcomes. A great example of that innovation is that recent launch of Secure Horizon Indexed Universal Life Insurance, developed in tandem with us here at North American, and the main focus of our conversation today. So this product pairs traditional life insurance protection with powerful accumulation potential and new retirement-focused benefits, like a first-of-its-kind longevity benefit base designed to help address risks like income shortfall and Social Security uncertainty. So I'm excited for you guys to hear about that today. At its core, Annexus is about pushing the boundaries of what insurance products can do so financial professionals can deliver better, more flexible solutions to their clients. Today from Annexus, we have Executive Vice President and Chief Distribution Officer James Hahn and Vice President of Life Insurance JT Bell with us. So gentlemen, I'll turn it over to you.
And Paige, we have you, right? James Hahn, thanks for your support in this relationship. Obviously, the IAMS North American relationship goes back a while, right, Curtis? How you doing, man? Go back a while, right? This has been a relationship in place for how many years?
It does for, gosh, a very long time. I think probably 15 years. It's been a very good partnership, and so you really helped us grow, helped our advisors grow, and I think this Annexus announcement is going to just continue that as well.
Yeah, good to hear your voice, Curtis, by the way. Hey, I'm just confirming, Curtis and Paige, you can see our slide. Are we okay? Can you see it?
Yep, you're good to go.
Yep.
Perfect. Hey, advisors, thanks so much for jumping on the call today. What I'm going to do today before we get in the actual products, I'm going to spend just a couple of minutes just on the Annexus story, and I'm going to relate that back to you, like why should you care? And I'll connect that dot. That's a really important part of what we do, is making sure the advisor, you on the call that's working with your client, how can we, at the end of the day, help you grab more wallet share within your current clients you're doing business with on life insurance, but also open up new conversations with new clients that maybe you're not doing business with today. And JT, our life leader, will walk you through the story, and we're going to be able to call out some unique innovation. More importantly, the narrative in terms of how we're closing bigger cases, as well as opening up new conversations that, again, you're not having today. A little background on me, I came from the advisory side in the field, and I understand that my given parts of my career in that role, I couldn't see another client, right? My calendar was already full. So I was always looking for new ways, new ideas that within my current conversations I'm having with my current clients, but also new prospects, what was out there or what is out there from a product innovation side that's going to help me grow my practice. I can't see more people, right? So we're going to spend a lot of time on that today. So let's talk about Annexus. Curtis, you set this up just a moment ago, and also Paige. At the end of the day, we are a product development company. That's what we do. And the vision of this started 20 years ago from our founder and CEO, Ron Schertz. by the way, this is important. He was you. He was an advisor. He, from Nebraska, worked the western part of the state, life insurance and annuities in front of clients. Sound familiar? That's what you do. That's where he's from. And the vision was for him is, could we build something from a product development standpoint that helps you, the advisor, have new innovation, new product innovation that comes your way. At the end of the day, we're all a little bit product dependent. We're looking for what's the next new idea. All of us are looking for that, and that was no different 20 years ago, but that's where it began. Could he start a product development company that he actually can control the widget, actually build the widget, FIA at the time, fixed index annuity. Of course, that now is expanded on the life insurance side, but the goal was, could he then take that to top-end advisors for an exclusive offering that you have access to? And that's what really began. And it started with finding distribution outside of creating the product development company. He then needed to find distribution like IAMS, a select few. By the way, there are roughly 19 different groups in the entire industry that have access to our products. Now, why would you care to that? Well, by you being partners with IAMS, you have access to a product with North American that not many advisors in your community and or the country have access to. That bullet point there, when I talk to top advisors, is meaningful. So in addition to building the actual widget, the actual product, in addition to that, we're creating the sales narrative as we're building the product. Now, why should you care about that? When you think about an insurance carrier, no disrespect, we love our insurance carriers. North American is our top partner from a revenue perspective and sales perspective. The actuary creates the product of the insurance carriers. The actuary creates the insurance product. They have never sold anything, right? They've never been in front of a client. Going back to Ron Schertz and all of us here at Annexus, we've all been in front of a client. We understand how that conversation can go. Now, do we do it every day like you do today? No. But the point is, as we create the product and new innovation, we are creating the sales narrative along the way before we come to market. Not only just the sales narrative, but all the marketing collateral that you'll use at point of sale. It's almost like when I began in this business, it was like a pitch book, right? It was a pitch book where, here's the kind of the flip book in a conversation within the client inside the home or business. Most of you or some of you may have started similar ways. There's a track to run with. That's what we do. So when JT walks through the story today, he'll use examples of the narrative, how to position the story, the sales pieces to help connect the dots inside the home or inside the business to bring this all together. Believe it or not, JT, you and I talk about this. We want our advisors and our clients to review and use our marketing pieces. God forbid, I think you've all been here. God forbid you leave a brochure behind from an insurance carrier sometimes, and they've never sold anything, and you hope to God they never read it because it just doesn't connect with the story. So we build the product, we build the sales narrative, we do it in an exclusive way as far as how we go to market. That's who we are. We came into the life insurance space going over 10 years ago, and we used the same vision we had on the annuity side: build the widget, drive the sales narrative, have great carrier partners, and then from there just simply replicate that on the life insurance side. This goes back to 2015. We've done somewhere in that $1 billion of total premium, about $500,000 of target premium. We put in force, because of you, roughly 15,000 new policies over that period of time. We have found that from a revenue perspective, our advisors are doing business with Annexus. Their revenue is higher per case. Our cases are larger. Again, going back to innovation, the position of the story, everything we do is about you, the advisor. Here's a breakdown of who our partners are. This is something we're really proud of. 20 years ago, it started with one insurance carrier called American Investors, right? Fast forward today, we have great carrier relationships. North American, Paige, you said it. During the pandemic, we actually built a product with North America on the annuity side in 8 months. We never saw them. And that partnership, that engagement, the leadership, how they support enforced policy treatment, how they take care of the advisor, we knew there was something more for us to expand outside of the annuity side. By the way, on the annuity side, we're clipping somewhere on that $3.5 billion run rate on the annuity side. We simply took that same brand, Secure Horizon, FIA, and now it's obviously now on the IUL side. In addition to that, you see the various asset managers, different banks that we do business with. We are the largest purchaser of options in Wall Street. That's pretty meaningful. What does that mean to you? What that means to you when we have that purchasing power, when you think about our par rates, our participation rates within the product, as well as the amount of diversification on the index lineup, that creates more value in the product. It opens up more conversations, different conversations with your prospects. It also helps your current blocks. Just a little more color about who we are and what we do here. I've already touched on this here. What we do from a product development standpoint, once we identify kind of the opportunity within the marketplace, what do I mean by that? IUL, for example, and we'll speak to this, be able to come to market on an accumulation product that in the future, if you decide to want guaranteed income, tax-free, and or there's a reduction of Social Security for your client, that innovation, that package has never been seen before in IUL. So where I'm going with this is we're looking at the marketplace and how do you take something that's what I would call a golden egg, an IUL. We all know the benefits of IUL, accumulation, tax-deferred, tax-free, no pre-59 penalty, all those things. But how do you add additional innovation, a different story that we can bring value to you to open up new conversations, current clients, and or new that you're bringing on? I've already touched on this. This is important about who we are. Hey, by the way, we're in Scottsdale, Arizona. I'm a Nebraska guy. I grew up in the Midwest. I've been in Arizona for going on 12 years, but our home office is in Scottsdale. We've got 105, 110 employees that help drive the product development as well as the sales narrative, so on and so forth. And by the way, if you're ever in Scottsdale, work with your friends over at IAMS or Paige. We'd love to have you, take you to dinner, show you around, show you what we're doing here, because this definitely is a partnership here. So that's a little about who we are and what we do. And if there's one takeaway that I want you to take from my conversation, this whole Annexus platform was built for you, the advisor. That was the main focus. So now we're going to walk through the story, and we're going to drive kind of the narrative and what's unique and what's different. JT, take it.
All right. Thanks, guys. And, I know many of you on this call have had great success with North American and the IUL space, and we're excited to unlock a new iteration of that. Like James mentioned, that, one of my favorite lines, and it varies a little bit, but roughly 94% of your competition cannot sell Annexus, including this product. So that exclusivity, find your own way to tell that story. We're all trying to differentiate. This is a way you can help differentiate with us and your broader offerings as well. So with that, we're really going to touch on the intentionality, what we set out to do when we wanted to build this product. And, best-in-class design was a core initiative, and we're going to look at that through the lens of kind of three components. So first of all, we wanted very strong income. Our goal was to be in that top 5 neighborhood on an illustrative basis. Now, we're going to hit pretty hard off the illustration, all the value and benefits that we have, but we know illustrations are part of the world we live in, and we set out to be top 5. And then this is a little bit of a spoiler alert, a lifetime guaranteed income option structured as policy loans guaranteed by North American, and because they're loans, they are on a tax-free basis. There's only a couple other carriers, arguably only one other real competitor in this space, and their design is built differently than how ours is. So a little setup on that. As most people know us, we build the crediting engines, the index options and strategies. So we believe in diversification. You'll hear us mention that a lot, including par rates up to 410%. To be blunt with you guys, that's the highest par rate in the industry with no buy-up or fee associated with it. So we'll touch on that in a minute. And then lastly, guarantees, you're going to hear that mentioned, are very important to us. We kind of force, for lack of a better word, our carriers that we partner with to put strong guarantees on the product. So in this product, you're going to see guarantees, par rates as much as 150%. And we'll touch on that here in a minute.
Yeah, JT, this slide here, when I think about going back to the advisor, when you start thinking about this lead income conversation, and we could have made the choice to be the number one on the spreadsheet from a pricing perspective. We know that's a slippery slope, right? And we know the illustration's wrong 100% of the time, right? But at the same time, you want to be able to show the Secure Horizon in a positive light for the customer, the power of that number, right? In addition, this par rate's as high as 410, or your participation rate's guaranteed as high as 150. This is about the advisor right now, ultimately the client. But if we can build the product in a way that increases your probability of meeting and exceeding the illustration, that's a game changer, right? Going back to the seats that we've lived in front of a client, we know how that conversation flows. They're trusting you, they're trusting me in the recommendation. And we made a decision to be a leader in the income side, yes, but also build other features, other benefits in the contract, like these high guarantees and these high par rates, with the goal and the intent of meeting and exceeding the illustration, right?
Absolutely.
A better outcome.
So when we talk about income, here's a lot of strong carriers. This is one of many samplings, but kind of a 45-year-old, 20 pay to retirement, take distributions. These are participating loans. So the makeup there pretty strong. We come in there and we actually, in this example, are number one. As I mentioned, it's not always going to be that way. Oftentimes we're in the top 5. So super competitive. Again, this is the traditional non-guaranteed income. And you can see a lot of our competitors out there and where we stack up. Going forward to the diversified index options, one consistent option that North American kind of innovated, and some other carriers have done too, is if you guys have sold IUL, most of you have, something unique happens when the client gets their first annual statement. It's impossible for them to have crediting on that first statement. So North American's answer to that was year 1, can we have 11-month crediting to give ourselves a fighting chance that the client opens the statement and has the ability to see positive crediting. We're going to introduce you to 2- and 3-year strategies as well. And in the fine print there, same story for 23-month crediting and 35-month crediting, again, to get the potential for crediting. So with that overview, let's look at what those indices are. And we start with our S&P Prism. I'm very passionate about this index. It has existed. We are now in the 9th calendar year live performance. One of the most tenured index in the IUL space, period. So good long track record. That has a domestic slant to it, Prism. RAFI is Research Affiliates, very cool firm based out of Newport Beach. They actually run institutional money, and their index that we brought over, we had intentionality, has a global slant to it. And again, we won't go too deep into those today, but happy to talk to you offline. And then last but certainly not least, we recognize that the gold standard transparency of the S&P 500 is very beneficial. We have 5 one-year point-to-point pure S&P 500 options. That is one of the most robust one-year S&P options product in the entire industry. We have a lot of innovation and excitement around our trigger, and especially our dual trigger, which you'll see here in a moment. And then not to sleep on bullet points 3 and 4, uncapped one-year S&P strategies. You guys know the last several years, the S&P's been on fire. Fantastic returns, north of 20% net crediting that you will never give back because it's a one-year point-to-point. So going back to Prism and RAFI, we have offerings for 1, 2, and 3-year point-to-point strategies on both. I'm in my mid-40s. I bought this policy as soon as I could, and I went a little more into that 3-year. We believe at Annexus that going longer creates the ability to get more efficient options pricing. So more upside for younger clients or people that have that timeline under their belt. So we'll touch on that here in a little bit. And when we start to break these down, our one-year point-to-point uncapped par rate up to 240%. Again, in the space, when you look at the industry, That is, simply put, one of the highest out there with no buy-up or fee associated with it. Our 2-year going out longer gives you close to another 100% par, coming in at up to 335%, and then that 410 you saw out there.
So JT, when we built this, I mean, you were a big part of this product build. What the objective here for the advisor is to meet them where they're at, right? You may have a bias toward more of a 1-year point to point, or you like the idea of going longer duration. The idea, though, you can diversify amongst the 3. Go 1 year, 2 year, 3 year amongst the 3. Here's the important takeaway, though, as part of the intention. When you look at these par rates, if we can average somewhere in that 3%, right, 3% index return, you look at your 240, right, going back to meeting the illustration, your 240 at 3, you're more than meeting the expectation on the illustration. We're not looking for these indexes to do a whole lot, right,
Absolutely.
JT? Going back to hand on your heart, right, as a product development company, hand on your heart, as an advisor, can we meet that expectation? And by going longer duration, being comfortable putting a small percentage of those monies in longer duration, your 3 now becomes a 12. So that's the intent. Options, meet you where you're at. 1 year, we got you. We encourage you to work with your IAMS team on the idea of diversifying a little longer duration within your premium. That was the intent. But it's about meeting where you're at. What are you comfortable with? Thank you.
And then when we talk about these par rates, I touched on it, but where does the industry kind of fall? And you can see kind of that high 100s is kind of where things are
These
at.
are par rates, right, JT?
Par rates, correct.
Rates, right?
Yeah.
Current par rates, right?
Yeah. Current par rates. So again, our 240 to 410, it kind of jumps off the page there. But more importantly, or at least I believe super important, when your client or their attorney or their CPA starts reading the fine print of these policies, look at the guaranteed par rates from some of our competitors. And, not to cast stones, I actually own an Allianz policy myself, but that kind of jumps off the page, and I don't think that's ever going to happen, but it's written into the contract that it could go as low as, call it 15.5%, when ours is 100 to 150%. So we can't promise what our underlying indexes are going to do, but we can promise what they do, you will get at least that with no cap. So pretty powerful in the guarantees. Point blank, we are the highest in the industry on guaranteed par rates. So you've heard us mention this a few times. We at Annexus want to help you meet or exceed client expectations. Right or wrong, that often is born on the illustration. The illustration is about 6.5%, the AG 49 rate. So let's take a look at that. And James touched on this. What do we need the raw index to do in order to meet or exceed the illustrated rate? So this is our Prism account, 225 to 355. That's the illustrated rate, low 6s to mid 6s. And look what that annualized return, guys, we're 1.5 to 3%. And this is not a short-term play. We want to do these numbers over a long period of time, 20, 30, 40 years. And to be able to hit 1.5 to 3, I've never had an advisor say, JT, an engineered index in today's market, it's unreasonable to do 1.5 to 3 over a long period of time. Now, historically, take this with a grain of salt, but when you overlay actual par rates with historical data, the numbers, average annualized return are kind of off the charts. So one of the things I like to talk about is what's real. I mentioned the tenure of our Prism. That LD in the middle of the page stands for live date. I just showed you how 1.5 to high 2s is all we need. We've been active almost 9 years and done right around 4. And frankly, we've had some tough times in the last 12 to 18 months. Some of our clients have got 0s. Depending on when they bought it, they may have got 2. But the point is, long term, we're well north of where we need to be. And year to date, we're positive when a lot of the S&P and the Mag 7 have been down year to date. So some call outs there. This screen you're looking at, if you just literally Google S&P Prism, the #1 result will be S&P's website where you can find this. You just have to apply the par rates kind of manually. So switching over to RAFI, this is that global slant. Similar par rates, that big 410, similar illustrated rates. You guys get the idea, 1.5 to 2.5%. The look back on this is even stronger, big double-digit average annualized returns. But remember, all we need to do is meet or exceed those mid-sixes on the second from the left column. We don't need to do 12, 15, 16. So remember that as well. So similar to that prism, I'm a big believer in kind of transparency and what's real. Now, this is a snapshot, but year to date, the raw index, 6.1%, and trailing 1 year, 8.2. Well, when you put a 240 par rate on top of those raw returns, you get a big number. And that's when the S&P has struggled. You can see in the far right, this was pulled a few days ago. This is in real time, we're doing exceedingly well. So we covered all of those. We're gonna hone in over here on the S&P strategies and the innovation that Annexus brought to the table. So specifically this trigger and then our dual trigger. With a trigger, it's real easy. If the market is up, you're gonna get 8.5%. So if it's up 1 point or 22%, doesn't matter, you're gonna get 8.5. If it's down, you simply get a 0. So pretty straightforward. A call out is a couple carriers, Lincoln, Allianz, some others have a trigger strategy. Point blank, our single trigger is the highest in the industry right now, period. Now, where the innovation comes in on the dual trigger, we borrowed stuff, if you guys are familiar with structured notes, RILAs, buffered strategies, etc. We set out to say, hey, if the market's up, again, if it's up 1 point or 22%, we're going to give you an 8. And you say, JT, what's the catch? Why wouldn't I grab that 8.5? The innovation never before been done in an IUL period. If the market is down between 0 and -10, we're going to come over the top and give you a +2. You're only given 50 bips on the upside to get 200 basis points of return when the market's down. So I know the S&P has been bouncing around, but most of the year to date, it was down between 0 and 10. If you would have ended in that scenario, you would have got a +2. We believe that there's COIs, there's policy charges, there's commission, there's stuff coming out of your IULs to get off home plate and click off a 2 in a down market. That pays for and covers some of those charges. So very innovative strategy. We're really excited about this, and again, unique to our product. So when you look at that strategy, how often is the S&P up, basically better than -10, where you'd either get a 2 or an 8? It's about 9 out of 10 times. You guys know the S&P, it's like 72% of the time is positive. So what is the end result? We're increasing the frequency at which you can get returns, whether it's a 2 or an 8. That's the mentality there, consistency. And again, you don't have to go all into this. Diversification is big. So standard 10.5% cap. Right now, there's a current 0.25% floor. That's the most vanilla index. These very powerful 1 year uncapped options, you can buy that with a spread of around 5 or a par rate of 64%. My 2-second one-liner for the value prop of the 64%. Pretend you went to Vegas, you walk up to a blackjack table, there's a little placard in the corner, says our rules are a little differently here. Minimum bet $100. You put your $100 out there. The placard says if you lose, we just deal another hand. You keep your $100 out there. If you win, we're going to advance $64 in chips and we deal another hand. How long are you going to sit at that table? All upside, no downside, no fee at the index level. Very strong story. That's clicked off 20+% net rates of return in the last couple of years, depending when you bought it. So what does that look like in the real world? In the world of complexity and AI and this and that, simple can sell. We believe in transparency. I explained the little blackjack deal, but this little Excel sheet on the right, very simple. We just took the raw S&P 500 period on a calendar year basis. We looked at it. It's been super robust. When you miss negative returns and have a spread, look at that blue number. We're within 100 basis points of what the S&P did on a raw basis in a bull market run. That's 64% par, 9.5. Now, all we need to do to meet or exceed illustrated expectations, 6.5. Very strong offering there.
So real quick on the S&P, JT, back to the intent, right? I mean, if you want someone, if you got a client just really simple in terms of how they want this credit to work, just trigger conversation. You can't screw that up, right?
Yep.
Anything equal to 0 grade, you get an 8.5, right? 8.5.
On
Or
the
8,
single,
excuse me, right?
single trigger, 8.5, yeah.
Right? Then through a -10, you get a +2. It will offset cost of insurance, those types of things. But if you got a client or you, the advisor, that wants to have diversification go along, get more of a home run hitter, right? Like this here, we got it. Mix and match, choices, options, different client conversations. That was the intent of the whole goal.
Absolutely. And then, that's a lot of the chassis of the product. This is where we're going to get into the innovation and kind of the game-changing nature. And, we encourage you guys to kind of wrap your head around the core product. If you just stopped here, this is a fantastic product offering. But what we did was we took it another layer, and what we call our secure stage suite of benefits, we decided to build this into the product for no rider cost. It is built into every Secure Horizon product that you will get. We didn't want our clients opting out of something that we believe through and through, kind of hand over our heart, this is an important offering. So the setup here is it's designed to protect against other things that could happen in retirement. So we're going to look at that. We all know longevity is one of the #1 concerns of clients. Even super wealthy people have a fear of outliving their money. We address that with our LifePay feature to generate guaranteed lifetime income as one of the options to take money out of this contract. James touched on this before. I'm 45 years old. I believe there's a pretty darn good chance that something happens with my Social Security in the next 17 years or so. And if that happens, this is the only product in the industry that has contractual language written into it that if they mess with my Social Security, and we can go deeper into what that means, then I unlock the ability to dip into our plan gap benefit. We'll touch on that here in a moment. And then lastly, life insurance, right? Leaving a greater legacy. Upon death, upon claim, your heirs get to decide if they want to take a spread death benefit over 5 years to put more total money in their pocket. So that's where we wrapped up our benefit suite. So an important part of this, guys, you guys have been selling IUL. We're all familiar with account value, surrender value, and death benefit. I like to say we pioneered and introduced this 4th column that we call our longevity benefit base. That is what's going to drive those 3 benefits I just touched on. And the spoiler alert is it's going to grow at a faster rate than what your account value is going to grow at. And I'll hit that here in a second. So what that looks like, and I'll back up one step. This isn't like overly complex. In the variable annuity world, in the FIA world, a benefit base has existed. We were the first to bring it to the IUL side. So again, another Annexus innovation. So what does that benefit base do and how does it work? It's very simple. You take the interest credit, whether you're in the fixed account, a 1-year, a 3-year, the S&P, the Prism, it doesn't matter. Whatever gets credited to the account value of the policy, multiply that by 150%, and that's written into the contract and guaranteed. That is what your benefit base will grow by. I like to go to the simple capped S&P, and I'm going to round down to 10%. About 3 out of 4 times in years is up. So let's just say you got 10, 10, 0, 10 to the account value. Very reasonable outcome. With this, you're going to click off 15, 15, 0, and 15. When you start compounding 15% rates of return and you never go backwards, you wind up with a BFN, a big frickin' number. So the next question is, okay, cute, JT, how the heck can my client dip into and use that benefit base? So we're going to hit you with a little example. 45-year-old, 15 grand a year, 20 pay. They've paid in 300 grand of their own money. For simplicity, we're going to assume they got credited interest of another 300 grand. But because of that 150% multiplier, they actually got 450,000 credited to that benefit base. When you combine that with their own money, you end up with 750 grand. Pretty powerful story. Again, the benefit base grows at a faster rate than your account value. Now, how can I use and dip into the 750? We're going to go to our guaranteed lifetime income, 750. We're using some simple rounded numbers, but by and large, you're going to get around a 5 to 5.5% payout factor. Depends how old you are, but I'm happy to report those age-based percentage payout factors are guaranteed at issue and will never change, period. So in this example, the client opted to take $36,000 a year, guaranteed for the rest of their life, tax-free under current tax law. This is structured as a policy loan that is guaranteed. Very, very powerful. And that benefit base is what separates us from the only other real competitor in the space. Theirs is a payout factor attached to the account value, not a benefit base. So, plan gap, similar idea. The takeaway here is I'm going to be able to get your client more money faster if they change Social Security, but it will still come out of that $750,000 pool. So if the formula that drives Social Security is adjusted for me in the next 17 years, that's a written contractual triggering event where I can now dip into that 750 grand, and instead of the 36 grand, I can actually get 62,500 as far as a guaranteed payout over a period of 12 years. Now, I don't have to take it over 12 years. I could take 6 or 7 years, and then I can go back and turn on LifePay for the rest of my life. So very flexible. It's not a use it or lose it. It's also not an annuitization. A lot of people's mind take them to an annuitization where the account value vaporizes. This is not buying a SPIA. This is not an annuitization. It is simply a loan that comes off the account value. So that's how that one works. This one, pretty straightforward. If your lump sum was 625, if your heirs wanted 750 and could wait to get it, that's an example of that. So in every secure stage illustration, I personally had a big hand, and I was very adamant about, I like the client to kind of nod their head after the first 5, 6, 7, 8 pages of an illustration. I truly believe you could get to a buying decision off of these first 8 pages. You can see on the upper right, the ledger pages. Of course, we have to sell off of that. The page before that is a simple summary. You pay in X, you get Y. And then as we work through it, we talk about that longevity benefit base. And that very last page, that's just the summary, the very last page, these are dynamic values pulled from the ledger page and displayed on a single summary. You can show your client if you want guaranteed lifetime income, if you want that plan gap or the enhanced death benefit. And this defaults to age 66. You can kind of see in the middle there. You can change that to 71, 73. You can change that based on your planning objectives. So one tool that we encourage you guys to use, and probably have about 5 more minutes here, I'll run through these, but Index Standard is a third-party due diligence firm that looks under the hood of IULs, not just ours, and they say, what is really comprising all those whiz-bang managed volatility, smart beta crediting strategies? Because there can be overlap. So what they do is they filter and allocate and slant how someone might want to allocate based on a forecasting methodology, not looking at historical data, but looking at things like the futures curve and 10-year treasury futures and what the Fed is saying. But smarter than most of us on this call, they apply data and quantitative reasoning to come up with a pie chart that is slanted based on what they're seeing. So these are one-page tear sheets we make available to you. If you only want to look at one-year strategies, that's the left. If you want to look on the far right, that is our multi-year strategy. So again, they apply smart logic to how your client might choose to allocate. So you can find that and many other things on our producer portal. Encourage your IAMS friends and Paige and our team to help get you set up. It's kind of at your fingertips. On the left, you can run an illustration. You can run an e-app and submit it. You can pull forms. And then on the right, if you say, hey, I want a brochure on that plan gap thing, you can see that. So this is a different carrier, but you get the idea of what it looks like. And again, we have to invite you to register for that. Here's some of our cool one-pagers. I'm a big one-pager guy. We make this library available to you. We won't go into all of them. One call out, many different ways to access cash value. That second one from the right. When I got here and we launched this product, I said, man, there's a lot of confusing bits and pieces to how to take money out. Can we just do a matrix and kind of summarize it? That one's pretty cool. So some other good tools there for you guys as well. We also built, Annexus built a client microsite specific to this product. I believe that clients like to self-study when they get home, whatever. Send them this link. There's no login. They hop on and they can kind of catch up and learn about this product on their own time. Very impactful there. And just to kind of recap here before we kick it back to Paige and Curtis, best-in-class design, super competitive targets, strong income, whether that's projected, non-guaranteed, or guaranteed, that really cool dual trigger strategy, RAFI, one of the longest tenured VCIs with Prism. I could go on. And remember those super strong current par rates and guaranteed par rates. And then last but certainly not least, that built-in, no added cost, secure stage benefit, lifetime guaranteed income, Social Security protection, and enhanced death benefit. So we're not going to get into these. I'm happy to do a one-on-one with you and your IAMS team, but I'm just going to kind of touch on how we stack up. Very strong excess revenue, a pretty cool niche one-pay design that can get north of 15% revenue to the advisor. A pretty cool design where our LifePay benefit can actually beat other non-guaranteed income numbers if someone runs at 6% and withdraws to loans. So pretty cool niche there that will take you through there. And with that, we'll kick it back to Paige and Curtis and answer any questions. And again, we can go offline as well. Steve Poppe on my team is a great point of contact and works very closely with Paige, so he can be available as well. But Paige, I'll kick it to you.
Yeah, awesome. Thank you so much, JT and James. That was an awesome job representing the product and the partnership. Team, we look forward to working with you on these Secure Horizon cases. You saw in this presentation that there are a lot of great benefits, a lot of great things going on. I know how familiar you all are with our BP4 product. This is an additional sale, an additional way to look at indexed universal life sales. The great thing is that you're familiar with how North American builds product. This is a great option to enhance what we're delivering to that client through our value proposition. So definitely dig into this with your marketers at IAMS. You have the North American team here and myself and AJ as well. And then you've got this Annexus partnership too, an additional resource to bring you into the minds of, the really boutique product designers here, right? So you've got Stephen Poppe, you've got JT Bell at your disposal, and James Hahn leads that team. So you've got a lot of great resources to explore this. If this is of any interest at all to you, we definitely want to hear from you. And Curtis and his team will be following up with additional marketing communications and things like that to make sure that you have all the resources to support your efforts in learning about Secure Horizon and Indexed Universal Life. So with that, Curtis, we appreciate the time that you've given us this morning. We'll pass it back to you to close it out.
Yeah. Well, I appreciate everybody going through this. I appreciate all the reps taking some time out of their Monday morning to be on the call. Huge opportunity. One really nice thing is I know many of you are set up with North American with us already. It's literally one additional page we've got to set up to get you active and access to the Annexus product. So the life sales directors, I would encourage you to reach out to them. They'll be making phone calls out to everybody this week as well. But a ton of opportunity. We're also going to planning on doing some more deep dive trainings on this and positioning and whatnot. So this is the first of several meetings that we'll have on this. But thanks everybody, and excited about the partnership and how it can help impact your business.